It happened, guys. It happened. Netflix reported earnings and it was a blowout. Okay, we're going to talk about that here today because I think the market is really excited with Netflix, and you guys know that it's a big position within the portfolio. It's treated us very well since we bought it last year while everyone hated it, and just seemingly so, the market just keeps rewarding the stock, and I'm happy for it. I'm happy for my returns, but I have to be objective here, and that's what this video is going to be. So let's talk about the stock price. You see 8.46% increase. Remember that just a year ago, everyone was pessimistic. Netflix is dead. All the other competitors are going to destroy them. Their content sucks. And remember that narrative. Watch the videos, the older videos on Netflix on the channel, and I discuss a lot about the data, what the data was showing as far as the popularity of the shows. And remember that the stock community is a niche, and the people who watch stock videos, you guys are, you know, a very small select portion of the population in the first place. You don't represent the broader audience. And Netflix consistently was getting the top content poll over and over and over again. Either 7 to 8 of the top 10 shows were Netflix. And it's kind of crazy. They just steamroll the industry. So going from there, let's go over to the shareholder letter. I'm going to highlight some important parts for you guys. So if you actually take a look at the first line, they say, we continue to lead the industry in streaming engagement, revenue, and profit. Okay, so we're going to talk about all those 3 points. Well, streaming engagement, they talk about their competition, and we're going to get into that a little bit more. They also talk about the revenue and profit because of the growth and projections, etc. So they actually just released a November product in November with the cheaper subscription tier, ad-supported, and in that component that captures a new market that other streamers were attacking before, but Netflix was not. And remember, that's one of the reasons cited by Bill Ackman that he sold Netflix. I disagree with him on that. I think the company is doing a good job moving in that direction, targeting more people, another wider audience, and really getting used to that supported structure, and that helps them maybe target other markets around the world. We know that Asia Pacific is still an underdeveloped market, but if you believe those economies will eventually grow and develop, those, let's say, average revenue per user should rise as well. So if we go to the membership growth, they grew a little bit. And remember, the narrative last year was memberships were declining. I think that's what really surprised the market here. But more on discussion with the revenue growth. Revenue grew at just 1.9%, but the forecast is 3.9%. Doesn't seem all too good, but when you consider the tough comps they had in Q4 2021, it starts to make a lot more sense. Well, with the context of the pandemic, okay, yeah, that's really tough to beat. And remember, they basically annihilated an entire country's worth of subscribers throughout the Ukrainian-Russian war. So we talked about that last year. I really encourage you guys to watch those videos if you're curious as to where this analysis even started. And again, I go over all those shows as far as like what are the top 10, what are the top 8. Over and consistently was basically Netflix. So another big piece of news, we do have a change in management. We now have 2 co-CEOs. Well, we had 2 co-CEOs before, but Reed Hastings is stepping down, and he's actually just going to be the chairman of the board. And we have now Ted Sarandos and Greg kind of together becoming the 2 co-CEOs. One of them was already the co-CEO, but point being, we now have a new co-CEO. And so this change, if we want to call it that, I think is much better than what we saw with Disney, with Bob Iger, Bob Chapek, and also with Amazon, because a lot of people have been making those criticisms too, but not to the same degree as the Disney transition. That was a bit much. So if we see some other components of this report, I want to come down here to the, not the forecast, not the content marketing, the product and the pricing. Again, talking about the new product that they had released. We know about the password sharing. They're cracking down on that. So all this longer term, I think, is going to be good for the business. But over here on the competition, I think this is where things start to get really interesting. The language here is something I've echoed in past videos about Netflix, but look at their choice. So they have linear TV, YouTube, and TikTok. Oh, social media. Anything that takes your attention away from them is their competition. Now, I've spoken about this in the past, how it's not necessarily the end all if you are watching only one show on Netflix a month. The vast majority of people do not cancel their subscription or they don't churn their subscription. What that means is they only watch one show, and then when they're done with that show, they unsubscribe, and then they will resubscribe when the next season comes out. Very few people do that. Most people subscribe and they kind of watch maybe the one show or they watch another show, and they have the subscription over time. So as long as Netflix gets that subscription from you, they're winning. So I have Disney Plus. I really should cancel Disney Plus because I really don't watch anything on Disney Plus. But every month that I pay for Disney Plus, Disney's winning. And in the case of Netflix, well, I don't watch Netflix all the time at all. But just because I'm not watching Netflix doesn't mean they're not benefiting from our relationship. I am a subscriber to Netflix and I pay them monthly, and they're winning on that basis. And I think I also have a HBO Max subscription. Not I think, I know I have an HBO Max subscription, and I only watch maybe one or two shows occasionally, and they're benefiting from my subscription. But I know that, to some people that's crazy, but I think that's very valid. A lot of people are like that. Now, we're all here on YouTube. You're watching me on YouTube, so this is maybe your preference to watch things on YouTube. But just because you watch the vast majority of your content on YouTube and that one occasional something on a streaming software or streaming product, that doesn't mean that, that streaming product is doomed for failure. And I think the market is huge. And they have this graph here that really illustrates this idea, showing you how much out there in terms of content there is and how much consumption and what is their market share of that consumption. So we do have linear and other streaming, and Netflix. So even just taking the other streaming, they're a small component of that. So there really is more room to grow for everyone. So Disney can win alongside Netflix, alongside Apple TV, alongside Prime Video, and HBO Max. So all these players can all win together. The market is huge and ever expanding. As parts of the world become more and more wealthy and they have more and more time, leisure time, that's going to expand the addressable market for all of these companies. So if we actually look, they actually were cash flow positive. Again, for this company, it's actually very difficult to calculate free cash flow per share, something that you're going to have to take extra care. And honestly, it's what puts a lot of people off this business in the first place. So the company actually tells you right here how much they've generated in free cash flow. Also, GAAP net income does a decent job at really illustrating what's going on underneath in this business. Again, very difficult business to analyze a traditional way, or let's say in a novice sense. But overall, I think that company's still a fantastic business. I do not think, or I do not care actually about any of these pages here, but this is kind of like the bragging points here. So I'm going to be talking about the regional breakdown and discussing each region by, let's say, piece by piece. So we do have the UCAN streaming with paid memberships still kind of growing here and there. If you see the paid memberships in the UCAN streaming, actually, sorry, this one's the declining one, but revenue has been growing. That's basically offset by price increases. You can see the average revenue per membership went from $14.78 to $16.23. So the growth in prices is exceeding the decline in memberships. And that's because that area, it's pretty much entirely penetrated, so it's already done. And then EMEA, we also have a continued rise in paid memberships, and we do see the average revenue per membership had declined. So that has to do with the currency fluctuations that they were addressing above. Then we have Latin America here with the average revenue per membership increasing year over year, but you can see how it kind of fluctuated, and paid members also increased. And then you had APAC, which actually went up as well in terms of paid memberships, but the average revenue declined. Again, currency fluctuations. So keep all that in mind. And then when we put it all together, what do we have with this business? Well, we have a fantastic business, no doubt. Good management team, well executed. And I think they have an advantage versus other legacy media companies where I feel like they're a lot more nimble. Netflix is staying true to the art form. I know that a lot of people feel there's a lot of content that's bad on there. In reality, how I see it is that Netflix is staying true to the art of film, really trying out tons and tons of ideas and sticking with what works, discarding what doesn't work, and moving on from there. And it's creative destruction. I feel like that's something that was lost in film and media. So Netflix going in that direction and maintaining itself in that direction, I think is a positive standpoint. It's a positive move. And I think long term, it's going to provide a lot of success, a lot of hits coming out of the company. So more recently, they had a show, if you haven't seen, the Addams Family Wednesday, which actually became popular around the globe, not just in the United States. And it's yet another hit produced by Netflix. So they just keep doing it, just keep producing hits, things that just come out of nowhere. And they're expanding into video games. We already know that. They're kind of slowly developing in that field as well. And they're also expanding into childhood or child content. So really making sure that they have something for everything, something that you would think automatically Disney's the best at. But Netflix is attempting to try to break into that. Now, am I bullish on the company right now? I gotta say, okay, if you made it to this part of the video, you actually get to hear my thoughts on this. I gotta say right now, I am not a buyer whatsoever. And I haven't been a buyer for a while. I've built out my position. I'm content with my position. If I had to choose buy or sell today, I'd be looking for the exit right now. I'll be honest. I'd be looking for the exit. It's done really well for me. That is true. But I feel like now the market is getting really excited about the business. And they should have been at least more rational back when the company was trading below 200. That was the opportunity. The opportunity is gone. In my personal opinion, you might look at this company and decide otherwise. You might say, no, the opportunity is fantastic. It's still there. And money managers out there are going to decide for themselves. They're going to say, this is a fantastic opportunity. It's all there. I'm not selling my position. I'm contemplating doing a strategy of selling some call options, maybe to kind of realize or capture some of the gains. In reality, I have to wait until about June of this year to have the more favorable tax treatment for the shares that I do own. So just keep that in mind as to why I might be holding these. And even if it falls a decent chunk, let's say it falls 20 or 10%, the tax implications of selling the stock is quite drastic, in excess of that. So with all that being said, I'm not a fan of this company, all right? I do like the company, and I think they're going to continue to execute well. I just think the stock price is getting ahead of its skis. And if it were to pull back significantly, of course, I would contemplate adding to the position. But as it stands now, I'm content with where I'm at. I'm not selling, but I'm, looking at the door, definitely. So with that being said, if you guys enjoyed this video and you enjoyed this update on Netflix, again, remember, if you're new to the channel, I've made content on Netflix in the past. I do my deep dive analysis on those videos. Check them out on the channel, and then you can kind of see where I'm coming from with this and the development over time, as well as you can check out all the portfolio update videos throughout time, and we kind of talk about and update the positions there. But if you guys enjoyed this video and you want to see more videos like this, feel free to subscribe, like the video, or don't like the video. It's up to you if you actually like the video. And I'll see you guys on the next one. Bye.